So now let's talk about MACD, that's moving average convergence and divergence. So MACD is a trend following momentum indicator which shows the relationship between the two moving averages of the currency's price. The MACD is calculated by subtracting the 26 period of the EMA from the 12 period EMA, and the result of this calculation is the MACD line. We while comparing the MACD line, we use a 9-day EMA that is called the signal line, which is plotted on the top of the MACD line, and this function as a trigger for us to get to know like if the signal is a buy signal or a sell signal. The trader may buy the currencies, in our case the cryptocurrencies, when the MACD line crosses above its signal line, and sell or short the cryptocurrency when the MACD line crosses below the signal line. So MACD indicator can be interpreted in various ways, but the most common ways are these crossovers and the divergence and the rapid rise and fall. So there are a couple of key takeaways we'll be discussing, like we'll be showing this whole thing onto a graph plot as well, but let's discuss about some quick takeaways. So MACD line is calculated by subtracting the 26 period EMA from the 12 period EMA, as you can see in the formula as well. MACD triggers the technical signal when it crosses above, that is to buy, or below its signal line. The speed of crossover is also taken as a signal of market being overbought or oversold. And finally, the MACD helps investors understand whether the bullish or bearish movement in the price is strengthening or weakening. This can be understood using the histogram as well. Now let's move to the chart part, and let's understand the whole thing in a much visualized way. Okay, finally now we have this particular chart as over here. Let me get the pointer. This will help me to explain in a much better way. So if you see, there are two graphs here, the top one and the bottom one, right? So the top one is the two EMAs graph, that is the 12 and the 26. So if you see this blue line, that is the 12 EMA, and the green one is the 26 EMA line. Okay, so if you see, and the difference of these EMAs form you the MACD line, which I have already drawn into the second graph, that is in the MACD one. So this line, this blue colored line, what you are seeing is actually a MACD line, and this is nothing like, again, this is the difference between the 12 EMA and the 26 EMA over here. Okay, and this pink color line, like the purple one, is the signal line. Okay, so which this signal line is the 9 EMA, which is by default, and the standard one, if you just search for if you just make a MACD line, so these are the default setting, like the 12, 26 and 9 as the signal line. And these charts that you are seeing, like this, the green ones and these red ones, so these are called histograms. I'll explain you each and everything one by one. So let's start with what does this mean? How do you identify the market momentum? As we know that this MACD defines the market momentum. So if you see, this is a signal line, right? So this is our MACD line, and this happens to do a crossover here, right? So if the MACD line is above the signal, going above the signal line, and if it intersects, or it makes a crossover here, that means we are going to see a downtrend, right? So if you see here, we are going to see this MACD line was above the signal line, and now it has a crossover here, and that's why you see there is a downfall in the price. That means it was a possible sell signal over here, and most of the people will start selling at this particular point. Now Okay, so this one is pretty much okay, like they are mostly on following the trend. And if you see here again, the it was the opposite kind of thing, like the max signal was below the signal line and it happened to cross here. So now this indicates that it is a possible buy signal. Okay, and so the person is supposed to buy at this particular point, and because it is going to have a big push, which you can say like the bullish movement here. And again there is a crossover here. This is again a downfall. That's a bearish movement. Great. So this happens almost everywhere. Over here you can see, over here you can see. So like if you see, this particular chart is actually following the mag line and our studies. If we do a careful studies like this, so we can actually get to know when we are supposed to buy and when we are supposed to sell. So this is one of the benefit of using a MACD in terms of cryptocurrencies, the prediction of the cryptocurrency, whether we have to buy, whether we have to sell it. Now talking about these histograms that I said, so this histogram is basically a difference between the MAC line and the signal line. So that means this shows like if these big towers are big, that means there's a huge bullish movement, and if it's on the opposite, that means it's a huge bearish movement. Now if you see closely, these lines over here are almost the same, right? So if you see like there's not much of the movement here. It's like kind of the static ones, the straight lines, if you see over here. And but if you see here, like these are the big ones. Oh, I can see a very big lines over here. So these means that the difference is huge, and that's a huge bullish movement here. So I guess that's all for this tutorial. I hope you guys have understood why we are supposed to use the MAC line, how you are supposed to use the MAC line. It's pretty much easy. We already went through in one of the videos, and that how we are supposed to select the various indicators. It's pretty easy, and it's pretty much done for this. Thank you for watching.